SmartOrg presents a short tutorial on how to create a tornado diagram like the one you're seeing on this screen using a simple product development example. For this example, profit will be measured using this formula which describes profit as volume times price minus cost. We'll assess each of these factors one by one. Starting with the volume, let's ask the marketing head what he thinks.
We'll sell at least 23 million units, and if we're lucky, as much as 27 million. But I really think we'll hit our mid-level at about 25 million units.
And so we have a little range now. Next we get to price.
Well, given the current market signals, the price will be between $1.50 and $4, but I think we'll hit $3.
And that gives us a range on the price. Moving on to the cost, let's ask the head of manufacturing what it's going to end up costing.
Oh man, I really don't know what it'll end up costing. It could be somewhere between 12 and 90 cents. If you really pin me down, I guess it's more like 50 cents.
So we now have a range on the cost. We now take the three ranges and look at the medium case with the three values, plug it into the equation, and we get a profit figure of $62.5 million, which we will call the base case value when all the factors are at the medium level. We can now plot this on a scale of profit with volume, price, and cost at these levels, and profit bar shows up at $62.5 million. Next, let's vary the volume to the low level and plug it into the equation and see what that does. We get a new value of profit, which we'll plug in to the graph there with the red bar. Now we'd also like to label this so that we know what happens to the volume to make it go down to 57.5 million. So we put the 23 million label on the left side of this bar. Next we go to a higher level of volume and plug it back into the equation, and we get a new value of profit which we'll plug in here and similarly label the bar. So as volume ranges from 23 to 27 million dollars with price and cost at the medium level, profit ranges from 57.5 to 67.5 million. Let's return volume back to the medium level and vary price to low and put in the new profit figures in exactly the same way. We'll go to the high level and put in the new figure, and let's do the same thing now with cost. And cost, you can see that the colors are flipped because a higher cost means lower profit and a lower cost means higher profit. So now we'll sort this based on the highest variation being on top, and we get the tornado shape. That's what gives us the tornado diagram. One important use of tornado diagrams is to help us debug our model and also question our assumptions. In this case, we notice that volume has a terribly small range, only from 23 to 27 million units, and this is very small for a new product launch. And we might want to question why we are so certain that the volume is within this narrow range. Perhaps there's a wider one. That's one use, an important use of tornado diagrams. Realistic tornadoes will have many factors. For example, in this screen from our software portfolio navigator, we show a whole bunch of actual factors that come up in a product launch situation. For instance, the market size, product growth rate, our new product margin, and things like how quickly is our product share going to ramp up, the product peak share in the market, how long does that peak share last, and other factors that are important in real life situations. And a tornado diagram will then be computed and presented with these factors, and although this looks a whole lot more sophisticated than the simple example we showed, the logic used in calculating this is exactly the same. Thank you so much for watching this video.